Hello everyone, welcome to today's video. And today we're discussing how clients can assess their PSC contractors for IR35 purposes. As you'll know from some of the other materials and content we have here on the Navigator portal, from the 6th of April 2021 onwards, all public sector clients and all medium and large-sized private sector businesses become responsible for determining the tax status, that is the IR35 status, of any PSC contractors they engage, whether directly or through an agency. Clients are required to use reasonable care when they undertake these tax status assessments. And understanding what constitutes reasonable care can be quite difficult because the term isn't defined in law. We do have other content that discusses reasonable care in more detail, so I'm just going to cover the basics here. Hmrc describes reasonable care as acting in a way that would be expected of a prudent and reasonable person in the client's position. Essentially, that means that the client should be doing everything that is reasonably possible and conceivable to make IR35 determinations that correctly evaluate whether an assignment is inside IR35, which is employed for tax purposes, or outside IR35, which means they are self-employed for tax purposes. If a client can't show that it has taken reasonable care when assessing status and when approaching the new rules in general, well, that client becomes responsible for any unpaid taxes and national insurance contributions for any PSC assignments. And those liabilities can add up to tens of thousands of pounds per contractor per tax year. So clients need to make sure that they overcome this reasonable care hurdle, and they should therefore expect that hurdle to be quite a high one. How is IR35 status determined then? Well, we know that undertaking IR35 status assessments it's difficult. It's a niche area of law which requires a multifaceted assessment process. While there are established factors that we know must be considered, the history and context of tax status is all enshrined in case law, not in primary legislation. So we have to look to tax tribunal outcomes to better understand how to determine status. There aren't any easy checklists or guidelines for clients to access or use that will accurately determine status for them. The main factors that we know that determine IR35 status are as follows. The amount of control exercised over the PSC contractor by the client, whether the contractor is required to personally perform the services or whether he or she can send a substitute. Whether there is mutuality of obligation, that is, an ongoing expectation for the client to offer work and for the contractor to accept it and do that work. The degree of financial risk that a contractor takes, and whether the PSC is genuinely in business on its own account. Does the contractor work with other clients? Does he or she provide their own high value equipment or materials in order to perform the agreed services? Now, we do have other content, including a video on the specific subject of these factors, so do check that out to understand this in a bit more detail. In order to properly determine IR35 status, each of these factors should be considered in their own right, and not just whether they exist or not, but the degree to which the factor is present or absent in an assignment. Then the insight gained from considering each factor is then used collectively to paint an overall picture of an engagement, and it's that holistic viewpoint that ultimately determines status. So what do you have to look at when applying these factors? Well, it's both the contractual arrangements and the day-to-day working practices that need to be considered. A contract alone won't determine a PSC status. What happens in practice is really the most important. Now you have an idea what you need to consider in order to determine status. You then need to decide how you're going to determine status. If you have tax specialists in-house, you could manage the new rules yourself using a combination of that tax expertise and legal and finance and operations. to ensure all the relevant information is accounted for and any determinations reach the correct conclusion. Alternatively, you could choose to use the government's own Check Employment Status for Tax tool, or CEST. It's free, it's easily available, and it gives you an immediate automated decision about status. But there are many, many problems with the CEST tool. For starters, it simply doesn't reflect case law. If you input into CEST the facts of the 30 plus IR35 cases that have gone to a tribunal, it comes out with the wrong determination, or actually can't make a determination at all, almost 50% of the time. The CEST tool therefore only supports Hmrc's view of IR35, as opposed to the view of a tax tribunal, and it is the tax tribunal who's the ultimate authority on deciding IR35 status. Secondly, CEST ignores a fundamental factor of determining status, that of mutuality of obligation, and it gives too much weighting to another factor, that of substitution. So the combination of these flaws means that the tool comes out with more inside IR35 determinations than it would if it was properly aligned to case law. And that puts clients at a significant commercial disadvantage if they choose to use CEST. Because if you use CEST to determine the status of your PSC contractors, and one of your competitors uses another method to determine status, and that other method is more closely aligned with established case law, then there's every chance that your competitor will have more roles within their business classified as outside IR35, meaning they, not you, will attract the best contractors in future. Most IR35 experts strongly believe that automated decisions on tax status simply can't be accurate. Deciding status is done on the balance of numerous considerations, facts and circumstances, and algorithms, no matter how sophisticated, simply can't interpret all the nuances and subtleties that need to be accounted for. Let's face it, if it was easy to determine status and a computer program could do it accurately, there'd be no need for IR35 investigations to go to a tribunal adjudicated by specialist judges with decades of experience in this area. So CEST has some significant failings, and actually many of the other commercial automated tools on the market suffer the same shortcomings. But if that's the case, what other options are available? Well, using an expert external assessor is key to ensuring you can show reasonable care has been taken. Good assessors will be able to educate your staff both about the new rules and the factors and principles that underpin IR35 status. Staff education and awareness has been identified by Hmrc as one of the requirements of proving reasonable care. Secondly, these companies will conduct IR35 status assessments on your behalf. Hmrc has confirmed that is a perfectly legitimate approach, providing the assessor is a genuine expert. So you will need to conduct thorough due diligence on those advisors and keep records of that due diligence as well. My top tips for considering clients who are considering using an external advisor are as follows. Ensure that the assessment that is conducted by the external assessor considers both the contracts and the actual working practices of an assignment. Ensure all the assessments are conducted or at least reviewed by a person, not an algorithm, and that that person has in-depth knowledge of IR35, which is a highly specialised area of law, and most law firms don't have tax status specialists in-house. You should ask for evidence of successful defence of Hmrc inquiries and investigations. If an assessment is challenged by Hmrc at some point in the future, you want to know the advisor has been through this process before and can genuinely support you. Ensure your partner is financially stable in case they don't do a good job and you want to pursue them for recourse. You want to make sure they're still going to be in business. Some providers offer insurance to back up their services, and these can be very helpful in managing your risks, but do read the policy carefully to make sure the indemnity limit is high enough to cover all the possible costs. Also ensure that the policy includes cover for all the possible liabilities. And by that I mean the income tax, the employees and employers' national insurance contribution, apprenticeship levy costs, and interest and additional penalties if applicable. However, it isn't just the assessment process in isolation that clients need to consider. As I've already mentioned, PSCs will be looking for assignments that are outside IR35 in the future, and will only take assignments deemed inside IR35 if they have no other alternative. That means clients really need to consider how they can change their working arrangements with PSCs to ensure that as many assignments as possible are genuinely outside IR35, and be able to demonstrate to Hmrc how these changes were properly implemented in your business and are being followed properly. A good advisor will give you those recommendations on what types of changes you could make to maximise the number of assignments deemed outside IR35. There are a number of ongoing considerations for clients in relation to the off-payroll rules. This legislation will apply for the foreseeable future, so it's not just about assessing current PSC contractors whose assignments continue past the 6th of April 2021, though I appreciate that will be the priority in the short term. And it's really in relation to these ongoing obligations where a good assessor can add value and reduce your administrative burdens. For example, does your external advisor give all parties in the supply chain access to a portal to ensure that everyone receives a copy of the status determination or SDS? This will save you significant time and resources because it means you don't have to send out SDSs to all your agencies and your PSC workers individually. If there is a portal, does it provide real-time management information so that clients can see which roles are being assessed, when roles have been completed, when they've completed the assessment process, and what the outcome is? Using some form of automation will really help you keep on top of what's happening at any given time, just as long as that automation doesn't include making the assessments themselves, of course. We know that roles will need to be assessed on an ongoing basis to make sure nothing has changed and that the original status determination is still valid, or issue a new status determination if the status has changed. New roles that come up that haven't been assessed before will also need to be determined, and clients will be responsible for implementing a status disagreement process. But again, this can be outsourced. Good IR35 assessors will offer all these services to support your ongoing compliance and your evidence of reasonable care, and most importantly, to ensure roles are not released without status determination statements attached to them. I hope this video has given you some insight into how expert external assessors can help you comply with the new off-payroll rules, and that perhaps you understand a bit more about the complexities of determining status, the work you need to be doing now, but also an appreciation that the off-payroll rules are very much an ongoing administrative and operational burden. The more you can outsource, the less you are encumbered with those obligations. Just make sure you outsource to the right company who will genuinely support you and reduce those burdens and minimise your risks rather than increasing them. Thanks very much. See you next time.